Good evening, everyone. My name is David Rose. I'll be your host for this evening. We'll get started in just a couple of minutes. We're just waiting for the last couple of people to come through in there. So we'll get started in a couple of minutes. Hey, Suzanne, how are you doing? Almost there, a couple more people. All right. Well, we'll get this party started as we wait just for a couple more people to come through. As I said, my name's David Rose. I am the managing partner of Vincent's, and joining me tonight I have Josip Matanovic. Hi, Yo, and James Prinius. So both James and Yo run our pharmacy division, and some of you you will know them and have seen them around at different pharmacy events. So appreciate the guild inviting us to cover off some things. And I guess it's seem a bit weird having a conversation regarding JobKeeper at this particular juncture, but one of the things that we know just from advising our own client base is that the relevancy for JobKeeper has really just started potentially presenting itself for your businesses. I remember I was talking to one of my clients the other day, and they sort of were scoffing off about some pharmacies that he was aware of applying for rental relief. And I said, well, what are you talking about? And he goes, well, they've been as busy as all get up. And I said, well, yeah, at the end of the day, they may not satisfy one particular test for JobKeeper, but certainly the other one is very relevant. So James and Yo will assist tonight. Obviously very pharmacy specific, unlike any of the other events that we've been hosting around this, so that you can specifically get all of your questions answered. And I guess just in terms of things, they're still changing around the place. We had the state government today announce the an adaptation grant of $10,000. Finally, Queensland caught up to New South Wales in relation to those people either that had to shut down or were significantly affected by by COVID. So that was announced today. Ever evolving. No sooner had JobKeeper started, they're talking about winding it back, but at the end of the day, it is here, it is relevant, and I've got a bunch of questions that have started coming through, so thanks for that. So if you do have questions that you want to get answered during the course of this evening, please feel free to post them in the chat section, and I'll present them to Yo and James. They will walk you through some very specific examples regarding the different tests and the qualification, and how you mightn't consider that you do qualify, but potentially can get through. And they were showing me this afternoon some of their examples. So I've got about 8 or 9 questions that have come through so far. So quick, continue to pop those through, and I might just get started as a fundamental, gents, just to provide just an explanation about how the JobKeeper scheme works.
Right, Rosie, I'll field that one. So I guess the JobKeeper payment scheme is, a scheme that has been put in place for, the businesses that have been significantly impacted by COVID-19. What it allows is it allows those eligible businesses, once you meet some criteria, and provides them with a wage subsidy to the tune of $1,500 per eligible employee per fortnight. The scheme runs from the 30th of March, which was the first fortnight that the scheme was open, right up until the 27th of September. So it goes for a significant amount of period and can result in, I guess, a significant sort of inflow to assist businesses keep their staff employed. So that's primarily why the scheme was brought about. And in terms of how it works, there's some eligibility criteria that you need to work through.
Okay, cool. And I guess distinguishing that from the other ATO, the ATO stimulus support around cash boost. So James, do you want to maybe talk about cash flow boost and how that works?
Yeah, so cash flow boost was one of the first initiatives brought out by the government. It appeared to be something they just sort of rushed out just to get some extra cash into some of these businesses. If you want to get a calculator, I can just share on the screen here our Vincent's website. We've got a COVID hub on our website, and if you click down on tools and resources, you'll be able to one of the tools there, and there are multiple tools there that you might find useful, is the cash flow boost for employers model. And this is what it looks like. And simply by putting in it's based on your PAYG withholding for your staff, so the tax you're withholding for your staff wages, and the model will calculate what we estimate the ATO is going to give you. For example, you could have either monthly or quarterly, depending on your lodgement specifications when you pay your PAYG. But let's assume you pay monthly and your March instalment was $3,500. Then you would have received a credit for $10,500 on your tax account, which, if in refund, would have been refunded. If there was an ATO debt, they were still refunding that $10,500 and leaving the debt. The way that it works, though, is there's a minimum amount that will be paid in the March quarter, or for the month of March, of $10,000. So even if your PAYG withholding was $1,000, you would have still got 10 grand as a minimum.
So the calculator works for that. So I guess for the benefit of people, who may not have lodged their March business activity statement at this particular point in time, it kicks off from there. And so, James, do you want to just talk about what that looks like then moving forward?
Yeah. So depending on what your April, May, June instalments are, PAYG withholding instalments from your staff wages, you will receive. Okay. So for the March month, they effectively tried to pay for January through to March, all on the March amount. So they've given you 3 times the March instalment for March. From then on, it's based on the actual withholding. So you can see 3.5 grand, which is pretty straightforward. The only complicating factor would be if, for example, you only withheld 2 grand every month, then you would receive nothing. You would receive the minimum of 10 grand, but then for April and May, you would receive nothing. Until eventually you got 3 times for March, 1 times for April, and 1 times for May, which happens to be 10 grand. And then when you lodge June, you would then get 2 grand to top it up to 100, effectively 600% of your amounts withheld from your staff. And that's the initial cash flow boost. It is a maximum, though, so if we put in 10 grand here, it's a maximum of 50,000 that's going to be received on the initial cash flow boost. Change these numbers back to 3.5 grand. Then the second thing that they added a couple of days later was the additional cash flow boost. The additional cash flow boost is based on your initial cash flow boost, and it's going to be paid based on 25% of the total initial cash flow boost, but paid over June, July, August, and September. Okay, a couple of things to know with this, though. It's a tax-free receipt. So a couple of things with that. If you're a sole trader or a trust, then it will just come through as a tax-free receipt. If it's a company, there's a bit a bit more complication because it's going to be received as income in the accounting records, and it's going to have to be paid out at some time as an unfranked dividend because there's no tax payable. What's really important too is you've got to make sure when it's being coded by yourself or your bookkeeper that it's coded as a non-taxable item when it's received into your Xero file or your BIOB file, so that it doesn't get reported on your BAS as turnover, because we're going to be reporting turnover every month if we're getting the JobKeeper. So it's important that it's not reflected in your turnover.
Yeah, James, we've come across some scenarios where maybe a single entity operates a number of pharmacies.
Yep.
In that case, does the cash flow boost, is it available for each pharmacy or is it per entity?
No, it's only per entity. So if you had multiple pharmacies, 3 or 4 pharmacies all in the one entity, they will get a maximum of $100,000. So let's change that to 10 grand. They'll get, even if it was for 5 pharmacies, they will get a maximum of 5 grand initial boost and 5 grand, a 50 grand initial boost and 50 grand additional boost. That's the maximum you can receive, is a total of 100,000.
All right, cool. And the other thing, just clarifying that we've seen was there was talk of if you had an opening balance on your tax account, at the end of February 2020, they were going to withhold against that. They've subsequently not done that, and
Correct.
released any credits to the extent that there are back into people's accounts, which was a good thing.
It probably wasn't applicable to pharmacy because they get refunds most months anyway, but some service entities where there's payable every month, the ATO may not have had bank accounts because you're payable each month. So we noticed some clients weren't getting their refunds purely because they didn't have their bank accounts listed with the ATO. So
yeah, and there's been other instances too. If you're a new pharmacy and you haven't lodged your 19 return, you need to manually apply for that. So it's just a phone call to the tax office, pretty straightforward.
All right. So, Yo, do you want to, run through the requirements in terms of accessing?
Yeah. So in terms of accessing, essentially, you need to work out whether you're an eligible employer to begin with. So the relevant date for all the tests is the 1st of March. And it requires you to have carried on a business in Australia, which typically most pharmacies would be conducting business in Australia. They have employed at least one eligible employee as at the 1st of March 2020. Your eligible employees are currently employed by your business for the fortnights you are claiming for. That includes those who are stood down and then subsequently rehired. And then your business has faced either a 30% fall in turnover, and that's for businesses with aggregated turnover of 1 billion or less, which I think typically most pharmacies fit into that category. Now, in terms of assessing the turnover drop, you've got 2 options. The first one is relatively straightforward, and that's just the basic test. So the basic test, again, just looks at you identify a test period. So in this case, it's say we're looking at April, the month just gone. You compare April 2020 against April 2019, and if the April 2020 turnover number had fallen by 30%, then essentially you get access to JobKeeper. Now, it may be the case that if you're looking at the comparison period in the prior year, it's not relevant. So there's the ATO identified that, or actually Treasury did early on, and left it to the ATO to devise a number of alternative tests. So there is 7 circumstances where they've described the alternative tests. One's where we've commenced business after the comparison period, but not on or after the 1st of March. Another circumstance may be that you've acquired or disposed of part of the business after a relevant comparison period. So you might have acquired another pharmacy, for example, or disposed of another pharmacy in the same entity. You undertook a restructure after the comparison period. So essentially the business is not the same as it was as it is now. Your turnover has substantially increased. So this may be, in cases where you've got, say, a greenfield pharmacy, or something has substantially changed with the pharmacy in terms of, well, we've had a fit out, therefore we've gotten some growth from that fit out, and we can't be comparing last year's turnover to this year's turnover because last year's was prior to fit out. Circumstances where businesses were drought affected, circumstances where there's large irregular variance in turnover. Again, that's probably won't apply to pharmacy too much. Where there is a sole trader or a small partnership where sickness or injury or leave has impacted the individual's ability to work on, and it has an impact on turnover. Again, probably wouldn't apply to pharmacy. Now I'll just run through. Let's share my screen.
Whilst you're just doing that, a bit based on your experiences, a lot of the pharmacies that you would have been working with wouldn't necessarily satisfy the basic tests. So you're going to focus more on this alternate test, so people have an understanding where they may have dismissed qualifying.
Yeah. So exactly right. So the alternate test is. And again, it took a while for the detail to come out, and even when the detail had come out, it was written in a vague sort of fashion that it was open to interpretation. So one of the tests, which I'll go through, we saw I think 7 different interpretations on how to apply it, and it's good that we've got some recent sort of clarification from the tax office as to what they actually mean. It was frustrating because we were just guessing, and it's good to get some clarity. But I'll just run through this, this spreadsheet just quickly. So the basic test, again, is just looking at the test period. So in this case, the test period is May. So with the turnover, you can either look at the actual for the month, or you can look at the projected for the month. You can look at the actual for the quarter ending 30 June, or you can look at the projected for the quarter ending 30th June, and that's all comparing it to the same period in the prior year. Now, the basis of the income that you've got to use is either accruals or cash, and that's dependent on essentially what you lodge your BASs on. So primarily, pharmacies are all, or I think a majority of ours are all accruals. So very rarely do we see one that is on a cash basis. But in that instance, you would always look at your turnover based on an accruals basis. So in terms of the basic test, here in this example, the test period is May, so the month that's coming up. In terms of April gone, the drop was only 6.38%, so it didn't meet the basic test in terms of JobKeeper. In terms of May, if the turnover is projected to be below 95,589, you can choose to enrol in JobKeeper. Now, I'll just pick a couple of the alternative tests that may apply. One is where the business commenced after the relevant comparison period. So where you're looking at a comparison, in this case, the test month is April. There is nothing to compare it to. So under this alternative test, they give you 2 options in terms of how to calculate it. They look at under the first option, you look at the average monthly turnover for the period up to the 1st of March. So in this case, it's June, and it's whole months, by the way. So it's June to February. So the average turnover for June to February is $140,098. Now, the actual turnover for April was $105,667. So you compare the actual turnover of $105,667 against the average. Now, if that is 30% down, then you meet the alternative test and are able to gain access to JobKeeper. So in this case, the business the reduction was 24.5%, and therefore isn't able to apply for JobKeeper. Now, in terms of keeping an eye on it for May, if turnover is looking like or is projected to be below $98,068, you have the opportunity to enrol into JobKeeper. So the second option in regards to this test is just looking at the average monthly turnover from December through to February. So in terms of that, in this example, the average monthly turnover December to February is 137,000. And again, it's the same methodology. You compare the turnover in the test period against the average to assess the drop. Now, the drop's got to be more than 30% for it to be eligible. So in this case, under this option in terms of this method, if May is below 96,500, then it is able to get access to JobKeeper. Now, I'll just go through one more alternative test. All these tests are outlined on the ATO website in some detail now, which is good. Now, this is an example where I guess turnover is substantially increased in a pharmacy.
So I think this is a question that's been asked by Susan as well.
Yep. Yes, so hopefully this addresses your question, Susan. So in terms of this test, this is the one that had 7 different alternatives in terms of how you calculate it and different interpretations. But it's good that we've got some clarity now. So essentially with this test, you've got to look at the growth on a 12-month, 6-month and 3-month period. So when you're comparing the 12-month period, the growth's got to be more than 50%. If you're under the 6 months, it's got to be more than 25%. And the last 3 months, it's got to be more than 12.5%. So in this example, we look at, you've only got to meet one of these in terms of the growth. So for the 12 months, if our test period is April, then we're comparing March against March. Now, the turnover growth there is going to be more than 50%. So it was only 39%, therefore doesn't pass. In terms of 6 months, you compare September against March, and the growth there is 26.5%. So it meets this test. So it opens the gate in terms of the ability to use this test. Now, once you've opened the gate, essentially the test is you take the average turnover for the 3 months prior to the test period. So in this case, the test period is April. So the average turnover for January through to March is $141,889. Now, if the turnover in this pharmacy was $98,589 for the month of April, its reduction under this test is 30.52% and is able to access JobKeeper. And again, this test sort of slides because it looks at essentially the month prior to the test month. So in terms of May, you'd be looking April versus April last year in terms of assessing the 50% test. The 6 months, you'd be looking at October versus April, and the 3 months, you'd be looking at January versus April under this test.
So Susan, does that, I hope if you can just let me know in the chat screen if that that answers your question.
So you will be able to access either the basic test or an alternative test if the alternative test is applicable.
What are you? Where are you finding? I imagine that because the pharmacies were quite busy at the outset, a lot of them probably wouldn't wouldn't fall in under the basic test.
We've had, well, some are looking like they may in May.
They may in May.
Yeah, they may be under in May. Yep. We've got some that are down. Look, there were some pharmacies that were registering CBD pharmacies. If you were in an airport, then you were down in April. So there's certain locations, big shopping centres, your Carindales and your big shopping centres. I would have thought they would have been affected significantly. I just know from when my wife went shopping there, she said it was dead at Carindale on a Saturday. So those pharmacies may have got it earlier, but the ones that we're seeing now are just your run-of-the-mill pharmacies. Seem to be down around that sort of 20 to 40%. There's some that aren't.
Yeah, I think May last year was a strong sort of cough cold season. So I think this year potentially the cough cold season's not going to be as strong. So all these sort of things are coming into play.
All right. So just in terms of really, the nitty gritty around it, I'm a pharmacy that, who's, as at today being the 19th of May, believe that I'm going to, be down, and be eligible, for, JobKeeper based, purely on my, prior May comparison. What are some of the things that just need to be ensuring that they have in place or have done, in terms of enrolling it? So I guess I'm talking about, what JobKeeper fortnight do they need to enrol in? Who specifically do they need to have paid what? All those sorts of things, because it's potentially, people could, be eligible in May but not have satisfied all the criteria that they need, to have done in order to, have access to the funds.
Correct. So once you've identified that you are an eligible employer that can access the JobKeeper scheme, you need to then go through and identify all eligible employees. So that in itself is a one in all in. So you can't be selective about who you choose. It needs to be all eligible employees as at the 1st of March under the list of requirements there.
Sure.
So in terms of what then needs to happen is if you're eligible in, I guess, the second fortnight of May, what that would mean is that you would need to meet the wage condition. So you need to have paid at least $1,500 to each eligible employee during that fortnight you became eligible. That's after you've received all the employee nomination forms back, obviously.
Okay, and there's an updated nomination form on the ATO website now, because obviously they decided that, well, after they first came out and said the 16 and 17-year-olds can take it, they've now clarified that and said it's only 16, 17-year-olds who are financially independent. So they've changed the basis on that. I have just had a barrage of comments come around into the chat window regarding high-value drugs, being excluded from the calculations. Is that correct?
No, the legislation refers to the turnover test as being GST turnover. So for the purposes of GST turnover, high cost prescriptions would be included in turnover, irrespective of the GP that you make.
Okay, yeah. So there was the second comment was regarding, because some of the gross profit on those some of those things is quite low. So so it is turnover and all turnover, correct?
Correct.
All right. Casual employees.
So in terms of I guess casual employees, it gets a bit tricky. So in terms of the eligible employees, an option is to include long-term casual employees. So again, it refers to a 1 March 2020 test, and the person was a casual employee. They needed to be employed on a regular and systemic basis during the 12 months that ended on the 1st of March 2020, and employed over that period by the same employer or another entity within the same wholly owned group or within the same business where there's been a change of ownership. So where you have acquired, say, a pharmacy within the last 12 months, you need to go through and look at all your casuals and go back to their start dates and just check whether they have actually been employed on a regular and systemic basis for the last 12 months. So things that might indicate that is a roster. So some rosters historically that you could go through in order to assess whether they have been employed on a regular and systematic basis.
Okay. Just in terms of this whole timing around enrolling specifically in it. So the JobKeeper fortnight the second JobKeeper fortnight, so JobKeeper fortnight number 4 for the JobKeeper program finishes
I can put those up.
Yeah, so it finishes on the 24th of May.
Yep.
Yeah, so finishes on the 24th of May. So do I need to have enrolled and met the eligibility criteria at that point in time in order to access any JobKeeper payments for the 2 fortnights in May?
Yep. So my understanding is you won't be able to access the first fortnight in May unless you are registered in that fortnight and had received your staff notifications before that fortnight ended, and you had topped up everyone to the $1,500.
Okay, so presumably then you've only got 5 more days to determine whether you're eligible for May or not.
Correct. Or for the second, yeah, correct. For the second fortnight in May, anyway.
So I guess the question then stems to, if people enroll now, based on where they think they're going to land for May and they get their projections wrong, what happens?
It's the ATO has provided some sort of guidance in that. They've basically stated that the projected GST turnover is a point-in-time test, and it needs to be a reasonable assessment of what was likely to be the turnover at the time you calculated the test. So it's not essentially they'll accept your assessment as long as it's reasonable. So there is some integrity measures that have been built into this where you may have sort of shifted income, from one period to another. Again, that's pretty difficult to do in pharmacy. But
FPOS sales or FPOS sales.
Exactly, and PBS is going to pay when you've dispensed the script. So the scope in terms of doing that is sort of limited. So it's an at point in time test, and it just needs to be a reasonable basis. The key is that you document your assessment of your projected turnover before you hit the button on it. Because if you were to go back and get audited, you need to make sure that you've got that evidence in place.
So we had some discussions with a number of pharmacies that coming into the first JobKeeper fortnight in May, they were down by more than 30%, but only marginally down by more than 30%. And on the basis for the month of April that they are up significantly, we decided not to pull. We didn't think we had sufficient evidence to pull the trigger in that first fortnight, and we held off. And we'll see in the next couple of days how their turnover's tracking.
Okay, so that sort of prompts my next question. I love playing devil's advocate and all of these sorts of things on behalf of the audience. So it's the 22nd of May, right? I have sorry, it has to be the 21st because the 24th is a Monday. Is that correct? No, 24th is Monday.
The 24th is the Sunday.
Yeah, so 24th is a Sunday. So on the 22nd of May, I have to make a decision about whether I enroll or not enroll and get the information through and make sure I've got all my nomination notices through. If people look at their close of business, on the 20th, and
I'm using the 21st, David.
Yep.
As my cutoff date, because the 21st gives us 3 full weeks.
Yep.
Of turnover. Because the first was a Friday, the 21st is a Thursday. It gives us 3 weekends, and there was 3 weekends in the previous year as well.
Yep.
And there was also a public holiday in last year in Queensland, and there was one last year as well. So our comparative periods are pretty much the same. The other thing that I'm taking into account in my thought process is that the 30th and 31st of this month in May 2020 are actually a Saturday and a Sunday. So the turnover in those in comparison to last year's 30th and 31st are probably going to be lower. So if I'm looking at someone who's at 31, 32% down at the 21st, at the end of the trade on the Thursday, then I'm telling my clients that they should pull the trigger.
Okay, and you'll just put the calculation down there as the way in which you've documented their
correct
eligibility.
And correct. That's exactly right.
Okay, so I guess
a
bit of mucking around to do with people who may not be on roster or may not be in the pharmacy on that particular day in terms of getting those nomination notices back.
Yeah, so the other thing that I've been doing is getting the clients who think they may be eligible to get their staff to fill those forms in now so that we're prepared, or at least have told their staff that they may be eligible, and that so the staff can have time to read through the form and understand the form.
Okay. All right. There's a question here regarding what about full-time and part-time less than 1 year by 1st of March? Do they qualify?
Absolutely.
Yep. So the 1 year, the 1 year only refers to the casual employees.
So
All right.
as long as you're employed on the 1st of March as a full-time or part-time, permanent is probably the word that's used, then they'll be eligible. The only thing is there's a couple of people who won't be eligible. You've got to be an Australian resident. There's some other criteria you just need to look at. You can't be on work cover. You can't be on paid parental leave. So there's some other things. There's some other things that you need to just check eligibility.
Okay. Question here about I have another company that employs my shop assistants. How does JobKeeper work with that? Yo?
So what we're talking about here is service entity arrangements. So it's a common structure in pharmacy where you might have the sole trader or a partnership or a company, but then to the side of it has an entity that employs staff and may hold the lease, for example. So essentially what happens there is, because the service entity itself is still incurring the expenses, the service fee that's charged to recover the expenses back to the pharmacy potentially isn't going to drop by 30%. So the government recognised this issue and made an announcement in late April and said that there will be some rules that would be released in terms of these service entity arrangements. What came in the legislation didn't quite cover service entities in a small business context. It certainly covered off on in terms of big corporates. So what we've ended up with are some rules that they've called the modified basic test for group employer entities. So in terms of being able to satisfy these rules, you need to be a member of a consolidated group, which I'd imagine most pharmacies wouldn't be, or a consolidatable group. Again, it probably not. However, it may apply to entities that or service entities that are grouped for GST purposes with pharmacies. So under that basis, you potentially get in. Now, there is additional sort of requirements where the service entity needs to supply employee labour services to the pharmacy only, and then you don't supply any service to other pharmacies. Then it also needs to be the principal activity of the service. The employment needs to be the principal activity of the service entity. So where you've got a service entity where you hold the lease and also charging that, it potentially doesn't meet this test. So you need to look through these sort of closely. But essentially, I think these rules probably rule out most service entity arrangements in pharmacy, unfortunately.
Okay. Here's a question that's come up, and we've seen it. Seen it amongst our client base. Situation where a staff member refuses to sign the nomination notice.
Yeah. So I'll handle that one, Yo.
Yep.
If you don't get a notification back, then the business isn't going to be eligible to receive the JobKeeper for that employee. It's that simple. You've got to get one of those back.
Awesome. Yeah, I mean, it's just it seems bizarre that that people wouldn't do it, but it's certainly something that we've seen a fair bit.
Sorry, the other thing too, Rosie, is there's some employees who can't sign it because they have another job somewhere, or they've been nominated by another employer where they've got a permanent role, because you can only fill in one notification form for one employee. You can't have two. So there may be some employees who can't sign it. for that.
Yeah, I mean, I've just seen situations where people just, think it's fundamentally, fundamentally wrong for,
Correct.
A business like a, like a pharmacy or an XYZ type business to, be in receipt of it if they didn't,
We've
if they
seen
didn't
those
shut
as well.
down. Question here. I run a pharmacy and I don't have any employees. Am I eligible for JobKeeper payments?
I'll do that one, Yo. So the ATO implemented a system for eligible business participants, they call it. So whether you have employees or don't have employees, an operator, a sole trader in a business is able to access the JobKeeper for the business. It doesn't have to be paid out in the form of a wage. It can just stay in the business. That's for a sole trader. There's another form that needs to be completed if you're not a sole trader. If you're a partner in a partnership of two individuals, then one of the partners needs to complete it. For every business entity, though, there can only be one eligible business participant.
An individual, and you don't have to have actually made the payment, to that individual in order to receive it.
Correct. The only complicating factors we've had or seen is that, for example, a partnership of trusts, or even a partnership of companies, or even a company that has a trust as a shareholder, none of those people will be eligible to be an eligible business participant.
Yeah, and that's fundamentally because they're not, the trust and partnerships, etc., aren't seen as carrying on, the business. I think there's a side question that's come off that regarding locums. So what about a locum pharmacist eligible if the work's down by more than 30%?
So, assuming the locum is trading through a company or through a trust, and they're a beneficiary of the trust or a director shareholder of the company, or they're a sole trader, then they should be able to. There's a whole lot of eligibility criteria that they need to look at, but on the surface of that question, they could be eligible to be an eligible business participant.
Yeah. So fundamentally, have an ABN.
Correct.
Or an ABN attached to any of those other entities that you're really, really talking about. The question: if I was down 31% in April and qualified, does that mean I'll automatically be eligible for the program till the program ends in September, or will I just have to justify it on a month-by-month basis? I'm down 30%.
I'll take that one, James. You only need to satisfy the turnover test once. So you don't need to test it in future months, but what you will need to do is there is ongoing reporting obligations. So when you go to do your sort of April declaration or May declaration, or the monthly declaration at the end of each month, essentially you've got to disclose your actual turnover and your projected turnover for the next month. That doesn't sort of essentially remove you from the scheme if all of a sudden it pops back, the drop below 30%. They're just using that for information purposes.
Yeah, the only thing I'd say with that is there's been a little bit of media around them cutting it short or cutting it off for certain business types. So obviously we can't say whether it's going to run through right till September because government can change things whenever they want.
Sure, and we've that's been hotly debated amongst people I know that are connected to our politicians, and the party line is that that it's not it is not being changed. So let's wait and see. So question here. So re the services entity, I believe they changed the rules to make it that they were a member of those groups you mentioned. If JobKeeper was applied prior to these additional rules and now is not eligible, how do you deal with the payments to employees made up till now? In other words, our interpretation of the original rules for service entities missed the updated rules.
So it's an interesting question.
It's a great question.
So essentially, I think you've got to first things first is you've got to look at the rules in more detail and see whether they actually do apply. In the case that they don't apply, you need to look at or get in contact with the ATO in relation to your enrolment in the program as a first point of call. In terms of the amounts paid to staff members, it's an interesting question whether you're able to claw it back from the staff members for the top up at the very least. But I would have thought there may be a potential liability back to the tax office for the JobKeeper payments that may have been received.
Does that answer the question specifically? Because the tax office aren't going to chase the employee.
Well, I'm not sure about the rules changing. I think it was an announcement, saying that they were going to bring out these rules. The issue was that there was a fair gap between the announcement and when the rules actually came out.
Yeah.
From what I understand, the rules actually haven't changed since they've been released.
They just interpreted the rules.
But if you've interpreted the rules incorrectly, at first, when I first read them, I thought the intention was just to throw all service entities in. But when you read that first requirement of being a consolidated group or a consolidatable group or a GST group, it pretty much kills every small business service entity arrangement dead out of the water.
Yep. So in that regard, have we answered the question? If they've overpaid the employee, I think what advice would you give them in that particular situation?
In terms of
does the stiff shit rule apply? Yeah,
it potentially could. It's a test of whether you've got some good employees or not. They may have actually spent the money. To be fair, you'd say that you've probably approached them and say that you've applied for JobKeeper in error and have since had to have paid the JobKeeper subsidy back to the government and ask for it back. If you get some back, I think you get some back. If you don't, you don't.
Yep.
The other option would be to just deregister from now and wait for him to come and see you. And you're deregistering as of the day you became aware of it, and let them come and get it off you for the ones they've already paid you.
You might find if you do approach the tax office to do that,
they might just ignore it.
That might be their solution as well.
Yeah, if you hang on to it I think it might be a different case if you've held on to it for the entire period.
Yeah, but if you've come up and approached them to come off, and they might come up with that solution themselves.
A piece of advice my father gave me a long, long time ago was you don't get what you don't ask for. So, if you want to try and ask for it back from the staff member, then go ahead. I've got a question here. What about a casual pharmacist who works part-time elsewhere and has not submitted forms with the part-time job? Can you apply on this behalf?
No. If they've got a permanent role somewhere else, then they can't be eligible. Sorry. They're a casual. Yeah, if they've got a permanent role somewhere else, then they can't be eligible as a casual.
You agree, Yo?
The other way around, I'm happy with. If they applied at the other one and got it, then they could have casual work, but they can't do it the other way around.
I'll just check that. Go on.
My radar's going off.
You think I'm wrong?
I didn't say that.
Move on to another question. I'll have a look at that one.
Okay. I think this is a question.
Hold on, I've got the answer. So if you've got employees that have multiple employers, they can usually choose which employer they want to nominate through. However, if your employees are long-term casuals and have other permanent employment, they must choose the permanent employer and cannot nominate you.
Oh, one for Jimmy. Good work.
Thought I read that.
Nice job. Okay. I pay my employee $1,400 a fortnight before tax, plus I contribute $133 super per fortnight to meet the superannuation guarantee obligations. Does this qualify for the minimum $1,500 payment?
I'll handle that one, Yo. No, it doesn't. You've got to pay $1,500 a fortnight gross. The only time it would be okay is if you had a salary sacrifice super arrangement in place prior to the 30th of March, and that amount was a set amount of $133 for some reason, then you could do what is being suggested in that question. But you need to pay a minimum of $1,500 a gross per fortnight if there's no salary sacrifice arrangement in place. One thing I might say too in relation to the 1,500 fortnights, David, I'll just bring those the JobKeeper fortnights back up again.
Yeah, so this is around a question here regarding pay cycles.
Yeah, so what I'll say is that just be careful in the month of August, because there's 3 pay cycles in August, and if your pay periods don't tie up to have 3 in August, then potentially some people might fall foul of not paying $4,500 in August, being the 3 JobKeeper fortnights. So just be careful of that, and especially if you've got some top up amounts.
Yep. So, and that's the only time in the whole period of the 6 months that there's 3 fortnights, correct?
Correct. Yeah, it's the month of August. Okay, so go back to what was your question then?
Do I have to change the pay cycle to match the JobKeeper fortnights?
So the answer is no, but you need to pay you need to have paid or be able to allocate $1,500 per fortnight. For example, the example the ATO gave was employers who pay monthly. Obviously, if you're only paying once a month, then you're not paying in a particular fortnight, but you can allocate that in the single touch payroll to be across those fortnights.
Okay.
Hope that answered the question.
Yeah, no, I think that I think that works. I mean, I did I got an Excel template where I just matched the enter the JobKeeper. I've got the JobKeeper fortnight set up, and then I enter the client's fortnights to show them, the match over, and that they're fundamentally going to get, the same payment in the period of time. But the point that you've raised regarding the August is very relevant. Do I have to show? This is this is the $64 million question, because it was designed, for businesses affected by COVID. Do I have to show that it's COVID-19 that caused the decline in the turnover of my pharmacy?
No, definitely not. The ATO came out really early in the piece and said specifically that it doesn't have to be that. It could just be the economic consequences of COVID that caused your pharmacy to be down by 30%. So it doesn't have to be directly affected by COVID.
Okay, so let me play devil's advocate. Let's just say, which month, February, pharmacy sales were right up. March
and April.
They were right up, right? Because people were
especially March.
So March was right up, and then people start looking at the alternate test, because April sort of fell off the edge of a cliff, compared to to March and looking backwards.
The problem we had was we didn't have the alternate test before the end of April.
Yep.
So that was
well, we did. We just didn't have a clarification specifically
on how to calculate it. So. But look, the reality is you can still qualify under the alternate test for April up until the 31st of May.
Yeah, thank you. No, that's important for people to realise as well.
Yeah, so you could still use the alternate test for April up until the 31st of May. The problem is if you hadn't topped up your staff and you haven't got employee nomination forms, then you won't be able to claim for April. And you won't be able to claim for April, and you definitely won't be able to claim for those casual employees you haven't topped up.
Yep. All right. So we've got 5 minutes to go, and we've still got questions coming through. So happy to hang around and answer all your questions. I think it's important. You guys work so hard in your pharmacies. on a day-to-day basis, and we just want to make sure that you're well supported. So question here is the calculator that showed turnover, has substantially increased alternate test on your COVID hub?
It's not on our COVID hub yet, but what we'll do is we'll reach out to you specifically and provide you something that you can use.
Okay, so have you seen the person that asked the question?
Yep.
You've noted that down, yeah?
Yep.
Okay.
Or you can load that spreadsheet up into the chat if you wanted to.
Yeah, it's hard because it moves, Rosie.
Okay.
Yeah.
All right. Can we ask, in brackets, make an employee work more hours if they currently earn way less than the $750 a week?
No.
No.
Why not?
Because you can't.
I think that if there was going to be any change to JobKeeper, I think it would potentially centre around, this particular issue.
Yeah, I agree. I think it's been they've announced it enough to know that that's coming. I think.
Can you please specifically give me the dates which I need to check to be eligible for May? If I think the turnover went up by 12.5%, in the what month do I check February to April 19? So yeah, you might want to bring that example back up and read through that question, specifically again, because it is. I know it's an area of confusion.
And this is where we had 7 different interpretations. So this is the turnover substantially increased test. So you'd look at the month before, your test period, and look.
So if you were testing for May, you would look at the month of April.
Correct.
Yep.
And compare that to May. That'll be your 50% growth. Then you look at October versus April, and whether that's 25% or more. And then in terms of the 3-month test, it'd be January versus April. And that would need to be more than 12.5%.
So instead of March versus March, it'd be April versus April.
Yep.
It'd be October versus April, and it'd be January versus April. Yeah, to be totally clear there. And then your May turnover needs to be 70%. Sorry, less than 70% of your average turnover for February, March, April.
Correct.
So Michelle, I understand that it's can be a difficult concept to understand. So if you can just confirm with me that you're comfortable regarding the answer and whether you require any other explanation, that would be great. So another question, so my understanding is that an employee who is permanent part-time and ordinarily doesn't earn $1,500 per fortnight can be guaranteed $1,500 a fortnight.
That's correct. So there is a requirement to make the top-up under the wage condition. And the top-up is the difference between the $1,500 and what they would get paid based on their hours.
All right. So Michelle's got a tick in that. And Yo, can you see that Lucas is also asking?
Yep.
Lucas is also asking for that information.
Yep. Done.
All right. Well, we are smack bang on 7 o'clock, and there's no other questions, sort of sitting in there. And I guess I just want to throw it out to everyone. I know this has all been about, JobKeeper and everything else, but is there anything else that, people want to, specifically ask? I mean, you're talking to 3 people who have spent basically 12, 13-hour days working with businesses through all aspects of, stimulus, loans, landlords, staff, JobKeeper, all that sort of stuff. So I'm happy to put the boys on the spot, just to keep their skill sets sharp, and
So there's one question that's just come through there, David, on does GST refunds and PAYG credit for April to May count as GST turnover? No, the answer is no. They should never be coded as GST turnover.
And make sure you don't put them as free in your accounting systems
So
either.
not free, not GST. They're just not taxable.
No tax.
No tax. And the other thing that I didn't mention also, if you do start receiving JobKeeper payments, that they should be non-taxable as well. Sorry, that doesn't mean you don't pay tax on them.
And
you will pay tax on them, but on the JobKeeper amounts you receive, but they're not taxable for GST purposes, and therefore don't include a GST code or put not taxable when you receive them. I hope that answers that question.
Yeah, no, that's that's good. I think that's
one advantage of accessing JobKeeper for pharmacies is your landlord then must negotiate with you under the mandatory code, is in relation to your rent. So I think the state guilds have done quite a few webinars and phone hookups with a couple of people in relation to the rents and what access the pharmacy could get to reduce rents.
Yep.
So they've done that already, but getting the JobKeeper it's compulsory. It's compulsory for your landlord to start negotiating with you. I think that's about it.
All right. Well, gents, thanks for giving up your time to everyone who took the time out to be involved. I hope that you found it informative. The guys are very passionate about what they do in the pharmacy space. We value pharmacies. We help pharmacies, grow their businesses, finance their businesses. We help in a whole lot of things. James grew up in a pharmacy, and family, a pharmacist. So he's been around the space, for a very long period of time, and he loves talking about it. He knows pretty much what most pharmacies around the country have sold for, and all that sort of thing. So please, feel free, if you're requiring sort of any support, or need a second opinion, or understand some things. The boys love what they do, and certainly appreciate being involved with organisations like the Guild and giving back in the pharmacy space. So thanks, gents, for taking the time out to
thanks, Rosie, for hosting.
Yes, thank you, Rosie.
All right, and to everyone out there, good luck with your businesses. Things will continue to change as we move forward. We will move into I've no doubt that we'll move into a new understanding of how this all unfolds. In the very near future. So, I hope that you're, able to navigate your way through. Most importantly of all, keep a smile on your face. I think that's, that's important as well. So, thanks for tuning in, and all the best.
Thanks, guys.
Thank you.